Shares of Apple, well, they're up more than 50% this year. My next guest says the bull case has just been reignited as well. Erik Woodring of Morgan Stanley raised his price target this morning. Joins me now to explain exactly why he did that. It's good to see you again. Welcome back.
Thank you very much, Scott. Good to be back.
All right, so your price target now is 220. Look, it dawns on me the last time you were on October 30th, Apple shares were 168, and we had a very frank conversation then, to the point where you were very honest with investors at that point. Said, look, I'm bullish. I think things are great, but I wouldn't necessarily step in front of the stock right here. Maybe it's going to pull back more. Maybe it goes down to 160.
Yeah.
Well, here we are, 195. Thank you very little. What do I do now?
No, the market is a very humbling discounting mechanism, so I think we all need to keep that in mind. But if you remember when I was there with you, I said there were two kind of near-term risks that I was concerned with. One was the risk of negative iPhone production cuts, and one was the risk of the Google DOJ trial coming to a conclusion and some form of adverse reaction. And in my view, both of those risks are now largely off the table. Han Hai's results earlier this week, I think, gave confirmation that there's relative stability in the supply chain. And what we learned earlier this week is that the timeline to conclusion for the Google DOJ case is multiple years away from now. And so, again, discounting that risk multiple years out. My point this morning was really saying over the last since October 27th, Apple has outperformed the market by 5 points. Market's been up 10 points. Apple's been up 15 points. I believe that over the next 12 months, the probability of Apple outperforming by a greater magnitude is higher. I'm not making a directional call on the markets. I'll leave that to Mike Wilson and my colleagues here at Morgan Stanley. But ultimately, with the bear case somewhat eliminated from the near term, I think there are things that we can look to that are very positive. The directionality of the services business. It's accelerating to mid-teens. That was a key crux of the bear thesis. Gross margins for the fourth consecutive quarter reaching a new all-time record, mid 40%. And then, as I wrote alongside some of my colleagues 2 weeks ago, a lot of the discussion about AI has been on a lot of the mega cap cloud giants. It really hasn't been on Apple. I think Apple's time to shine is still on the future when it comes to AI. That gives some investors something to get excited about. And yes, I know the stock is $195. On my fiscal 25 earnings, that's about 26 times earnings. Stocks traded between 18 times and 32 times over the last year. Valuation isn't cheap, but it's not overly taxing. And if you ever make a valuation bet on Apple, historically, you've been proven wrong. And so I just think with the bull case, with bear drivers somewhat diminished in the near term, there's things to look forward to in 2024 that get me excited.
It's funny because, if you're right about Apple's trajectory in 2024, Mike Wilson's going to be, he's going to still be wrong on where the market's going. But that's neither here nor there. I don't want to put you in a difficult spot. You must assume then that smartphone demand has troughed.
So that's a good point. In my world, in the world of hardware, which is a very cyclical world, you typically want to buy hardware stocks at two different points. One is when you believe that the absolute kind of demand generation has bottomed, and or when you believe that we're in for kind of a sustained period of acceleration in year-over-year growth going forwards. We do believe the PC markets have bottomed. We do believe the smartphone markets have bottomed. Demand is still very uneven in the near term, don't get me wrong, but as I look at my Apple model, over the next 4 quarters, I forecast growth accelerating incrementally each quarter. That gives you something to get excited about. And so there is still very much an uneven demand market. But again, there's times that you want to buy hardware stocks. I think for at least Apple, that time is now.